So we have like the bullish structure, and we all know that whenever the market is going all the way to the upside, it means the market is in a bullish direction. So whenever price is going up, we know that okay, the price is going bullish. So we have the bullish structure signifying swing highs and swing lows. We all know what swing highs and swing low is, higher highs and higher lows. Like we say, the forex market moves in waves. The forex market moves in waves, making series of higher highs and higher lows. So when trading the forex market, the forex market doesn't just push all the way to the upside like that at a stretch. It moves in waves. It goes up, come down, goes up, come down, gradually moves in waves all the way to the overall highs or whatever. So that's what we call bullish structure. And we have like the bearish structure. Like you guys know, the bearish structure goes all the way to the downside. So let me give you guys an example of the bullish structure and how we can actually amplify or um mark it out on our charts, trading the supply and demand concept. So the bullish structure, you guys know, swing highs, um, come on, come on. Bullish structure, swing highs, swing lows, swing highs, swing lows, swing highs, swing lows, swing highs, and swing lows. So this is what the bullish structure. Whenever the market is going all the way to the upside, make series of swing highs and swing lows. Let me show you something. Like I said, forex market moves in waves. Like I made mention earlier, the forex market moves in waves. So this is what you should be expecting. Swing highs, swing lows, high, low, high, low. You guys can see the waves, high, low, high, low. The forex market moves in waves, and when trading a bullish structure, it goes all the way to the upside, comes all the way to the downside, making series of swing highs and swing lows. The same goes for bearish structure. The same goes for bearish structure. Whenever the market is coming all the way to the downside, the same goes for bearish structure. Whenever the market comes all the way to the downside, it makes swing lows, swing lows, swing highs, 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 swing lows. So let me give you guys a bigger example of how the market moves in waves on the bearish structure. Swing lows, swing highs, swing lows, swing highs, swing lows, swing highs, swing lows. This is how the forex market moves. It moves in waves. So the forex market do not necessarily move because it's going all the way to the upside. Just move like this, something like this. It doesn't happen like that. The cases where stuff like this happen is only when the news happens. And whenever an economic news happens in the forex market, the market is literally going to reverse all the way to the opposite direction um to fill up all of those imbalance and move properly. You guys understand? While the other type of trending market we have like the sideways trend. You guys know what the sideways trend is already. Just literally going to give you guys like this example, then we'll move forward to the chart. Sideways market is how sideways market moves. You guys know sideways market making swing highs and swing lows in a specific direction. Here also swing highs, sorry. Swing highs, swing lows, swing highs, swing lows, swing highs, swing low. It's like a consolidation market. When price is consolidating on a specific area, the market is consolidating on a specific area. So this is what it means. So this is literally what it means. Sideways market, this is for uptrending market. When the market is trending all the way to the upside. This is for downtrending market when the market is trending all the way to the downside, and this for a sideways trend when the market is trending in a specific direction or in a specific in a specific order, going all the way to the upside, going all the way to the upside, coming all the way to the downside, failing to break the highs and the lows. So the market is consolidating, which means the market is in a sideways trend. So literally, I'm not going to waste time. I'm not going to waste you guys' time. I'm just literally going to go into the chart to show you guys all of these things. Trading this particular concept in supply and demand principle. So some of you know, some of you find it hard to actually how would I put it? Some of you find it hard to actually um should I say narrate the structure of the market when you want to mark out your POIs and everything. If you find it very, very hard to know the structure of the market whenever you want to mark out your POIs, your supply zone, your demand zone, and everything. Okay, so like you guys know, the first thing I always look for whenever I am trading, the first thing I always look for whenever I'm trading is the structure of the market on the higher time frame. The structure of the market on the higher time frame. That's literally what I look for whenever I'm trading the forex market. The structure of the market from the higher time frame. And judging from this particular chart, I can see that the market is literally in an uptrend. The market was in a downtrend, making series of lower lows, lower high, lower low, lower high, lower low, lower high, lower low, and everything. They started reversing all the way to the upside, making series of higher lows, higher highs, higher lows, breaking all of this structure, breaking all of this structure. So when the market got to this particular area, it reversed because this actually an area of an area of supply that swept liquidity. I'm not going to be talking about liquidity here. An area of supply that swept liquidity, then price came all the way to the downside, broke this particular structure. So we can also consider this to be like an inducement before the zone. Broke this particular structure, they started going all the way to the upside. This is on the 4-hour time frame. But if you come down to the 2-hour time frame, if you see that, okay, the 4-hour time frame has told you that, okay, the market is literally going all the way to the upside from the current direction of the market right now. Market is going all the way to the upside. And you know, for those of you that think that this is actually a supply zone, it is not. Always be aware. Always be aware of whatever is happening in the market. This is the liquidity. Price is literally going to sweep that liquidity. So you know that, okay, the current trend of the market on the 4-hour time frame. That's why it's not good for you to shrink your chart whenever you're making your analysis. Don't over shrink your chart like this. It doesn't work. Do not do that. Mostly on the higher time frame, do not do that. You come to the chart. This is your default what's called your default zoom settings. Then you see that, okay, literally the market is going all the way to the upside. It has broken the structure. Market broke the structure, broke the structure. So the market is literally going all the way to the upside. You now know the trend of the market. You know the trend of the market from seeing the market directly on your PC. You know the trend of the market already. So let's say we shrink it a little bit. Then we'll see the past. We'll see what the past is saying. Look at the past. Yeah, you can't consider this to be a supply zone because these are liquidity that price is literally going to go all the way to the upside to take out. So you cannot consider this to be a supply zone. And you know that, okay, the market is literally moving all the way to the upside. So what do? Burn down to your lower time, let's say like 1 hour time frame or 1 hour time frame or the 2 hour time frame. So I'm literally on the 1 hour time frame right now. So looking at the 1 hour time frame, what do you guys see? You guys can see the clear trend of the market. It is very, very clear. It is very, very clear. The trend of the market is very, very clear. The market is moving all the way to the upside. So this is one principle for you to always know how and the patterns at which you'll be able to watch your charts. For your chart not to be confusing. You should be able to the patterns for you to be able to watch your chart and know the current direction of the market. It is very, very important for you to know the structure of the market first before you trade. So if you find it very, very difficult to get the structure of the market, looking at the market, it's very, very confusing. But I'm giving you guys like a simplified, what's it called? Simplified way for you to actually know the trend of the market. Whenever you come into the market, all you just need to do is just like check one or two things. You know the trend of the market, sharp. Then you go on to be doing your analysis, looking for your zones, your break of structure, and all of those things. So the number one principle in looking for trends of the market structure, the number one principle for you to be able to spot out the structure of the market very clear, because some of you know, or majority of you know that trading the forex market, there are certain structures that will not be clear to you. You just come to the chart, you'll be seeing structure of the market. You will be very, very confused. You'll be very, very confused. Oh, is this structure clear? Is this structure good? What is this market saying? Is this market saying like this? You'll be very, very confused when you come into your chart. There are times like that. I know I've faced times like that too. But what made me to actually grow past that stage is knowing two things, which I'm going to be disclosing to you guys. Knowing two things. One, once a market trend is not clear on the higher time frame, move from that chart as fast as you can. Don't contradict things for yourself. Once a market or a currency pair you are going to be analyzing is not clear on the higher time frame, if you are trading the higher time frame, like we are swing traders, we trade the higher time frame for like 2 hours, 4 hours daily time frame. Do you get? If the trend of the market it is not clear on the 4 hour time frame, the 2 hour time frame, bro, I am leaving that chart. There are a lot of fishes in the river. You shouldn't be on that chart because I want to trade GPUSD, I want to trade GPUSD. GPUSD, I've seen the trend of GPUSD is not clear to you. Like the structure is not clear to you, but you want to trade GPUSD, you want to trade GPUSD. How would you trade GPUSD when the structure of the market is not clear to you? You just want to contradict things for yourself. You want to give the market your money. Do you get? So the first rule, whenever you are looking for structure, whenever you want to identify core structure of the market for you to trade, take your trade off of, please, if the trend of the market is not clear on the higher time frame, 2 hours or 4 hour time frame, if the trend of the market or the structure of the market is not clear to you, please bounce. Leave that particular chart. Go to the next one. This is why we have a multiple watch list. I have close to like 30 pairs I'm always looking out for every single week. So once one is not clear, instantly I move to the next. Once the other one is not clear, instantly I move to the next. So just imagine me having 30 pairs on my watch list every single week, and I come out to not give you guys any trade in a week. Just imagine. I have 30 pairs on my watch list. Then I come back later. There's no trade this week. Is that possible? Of course, it's possible. You only trade what you know. You don't trade what you think in the market. So what I know about the market, if I don't see it, I can't trade it because I want to lose my money. I'll just try to contradict things to myself in the market. I don't know if you guys understand. So that's literally the number one reason. Whenever a trend or a structure is not clear on the higher time frame, the 2 hour time frame, the 4 hour time frame, if it's not clear, please move away from that chart. Go and look for another chart to analyze. Go and look for another chart to start doing your analysis. So that's one reason for you to always look out for clear structure of the market. If it's not clear on the higher time frame, please bounce. Leave it. Let it be. So number two reason for you to put into consideration whenever you're looking out for a good structure where you want to make your analysis from, please do not go all the way to the past making your analysis. People do this and they don't what should I say, they don't get any trades during the week. Yes, during the week they don't see any tradable setup. They'll just be there hanging around. They will not see any tradable setup and try to go and force trade on another pair that will give them loss. Please do not shrink your chart all the way to Jericho like this. This is number two reason for you to look out for structure, good structure. Do not shrink your chart all the way to Jericho when you want to like make your analysis. Do not shrink your chart all the way to Jericho, please, or Jerusalem rather, because it will give you another view of the market entirely. Like we supply and demand traders. Whenever we see an area of supply, our eyes are very, very attached to that area of supply or demand. So imagine shrinking your chart to Jericho like this, then you see one supply area at a specific point. You start deliberating, okay, I think I should take a trade off of this particular supply area, which is maybe that supply area is not valid or is not going to hold. So please, for you to identify good structural market, you do not shrink your chart all the way to Jericho or Jerusalem, please. come to your chart on default on the higher time frame. You guys can see how clear it is on the 2-hour time frame. Uptrend, structure of the market going all the way to the upside. Go to my 4-hour time frame. Uptrend, structure of the market going all the way to the upside. How did I know that the structure of the market is going all the way to the upside? Shrink it a little bit, not to Jericho. Shrink it a little bit. Price has been making series of lower lows, lower high, lower low, lower high, lower low, lower high. And you know that this particular point is a significant supply zone. So when the market got all the way to this particular point, it reversed, came all the way to the upside again, got all the way to this particular supply zone, it reversed, went all the way to the upside, and this is a liquidity. So we know that price is literally going to come all the way to the downside, mitigate on the demand zone here, probably all the way to the upside again. So you know, you've seen the structure is going all the way to the upside. Now you are looking for reasons why you think that market is literally going to still move all the way to the upside. So now is a reason. Structure of the market in the past, downtrend. Market started shifting all the way to the upside, shifted all the way to the upside. Now it's at a specific area of resistance. It's respecting a resistance and literally going to break that resistance. I'm very, very sure. Literally going to break that resistance, but on breaking that resistance, we're looking for what's it called, a demand zone. So this structure of the market is very, very clear. You can see it. You don't have to shrink your chart all the way to Jericho for the market to give you a different perspective entirely. Looking at the chart like this, you'll be very, very confused. You'll be very, very confused. This is where you'd want to, okay, the market has mitigated here. You are going all the way to Jericho. If you want to analyze it, okay, the market is going to pull back all the way to this particular area to mitigate. When will the market pull back to this particular area? When? It should be like 4 months' time or 3 months' time. So you understand. The two reasons when looking for a good structure of the market is one, do not shrink your chart all the way to the past, as in like the past. Do not shrink your chart all the way to like the past. Do you guys understand? Then two, always look for the current direction from your 2-hour time frame or your 4-hour time frame. The current direction from your 2-hour time frame or the 4-hour time frame, which is like the higher time frame. The higher time frame will give you exposure or will give you insight on where the market is actually going to, because the higher time frame is what makes up the lower time frame. Do you guys get? So that's the two reasons for you to always look out for structure on a chart or a currency pair you literally want to trade. So going down to downtrend is still the same thing, the inverse of an uptrend, coming all the way to the downside, coming all the way to the downside. Let's use this one as an example still. The market has been ranging all the way to the upside, making higher highs, higher lows, higher highs, higher lows, higher highs. So the market started coming all the way to the downside, making a series of lower lows, broke the structure, and finally broke this particular structure. So what can we see here? You can see that the market has been ranging all the way to the downside. You guys can see downside making series of lower lows and lower high. So the structure is very, very clear here that the market has broken this past low. This demand zone here started coming all the way to the downside. So one, do not shrink your chart all the way to Jericho. Do not shrink your chart all the way to Jerusalem just because you are looking for structure. And two, always note from the higher time frame. Your higher time frame, 2 hours and 4 hours. I keep making emphasis on 2 hours and 4 hours because I mainly use 2 hours. If you check my analysis, if you check all my analysis, you see that it's mainly on 2 hours and 4 hours. I send you guys any trade. If you've not been checking, just check. All the analysis I've been sending you guys is mainly on 2 hours or probably like 4 hours time frame. So you guys get. So please and please, whenever you are looking out for all of these things in the market, whenever you're looking out for structure of the market, do not shrink your chart all the way to like 1 year ago, 8 months ago, 6 months ago, 5 months ago. Do not. Only when you are a position what's called trader. Like you guys know, position trader is different from swing trader. Position trader are those people that trade from the weekly time frame, the daily time frame, the monthly time frame, they'll just hold a position for like a year. Those are what we call position trader. But you, the retail trader, that you don't want to be trading day to day and everything, so you know what I'm literally talking about. Do you guys get? So that's that on structure, and I'm going to end today's section here by giving you guys just the structure. Then on Thursday, we're going to be moving on to the next topic on the PDF, which is like supply and demand zones. So this is just like an introduction. Like we all know what structure is. This is just like an introduction, telling you guys how to identify structures and everything. And so now we'll move on to the next topic on the PDF, which is supply and demand zones. How to identify supply and demand zones. So from there, we'll move on to other block. From other block, inducements. From inducement, fair value gap. Then from fair value gap to knowing how to put all of this is everything into consideration from the structure, supply and demand zone, order block, inducement, and fair value gap. We put all of these things together, so you guys see how I was able to like put all of the PDF, put all of the content together on the PDF. I literally just from the way I trade, my perspective on trading and everything, how I trade, step-by-step process. This is how I was able to compile all of this information from structure to supply zone, demand zone, to order block, to inducement. You guys know how I trade. These are all of the confluences I look for whenever I'm willing to place my make an analysis or place a certain trade. So this was the reason why I literally just give them to you guys step-by-step process for you guys to understand very, very fast. You guys get. So I think we're going to end this section here. It's almost time to end. And please, if you have any question, please do all to ask before we end today's class. The floor is open, please. If you have any question, just unmute and yeah. Two minutes. If you have any question, please ask. 2 minutes. Okay.
Hello, sir.
Hello?
Hello? Can you hear me, sir?
I can hear you.
Yeah. Okay, please, I have a question to ask.
All right.
Concerning the structure. Okay, from this particular pair that you just that you use it, for example, based on the structure, like, can we look beyond from the previous low? We can see it now that the market is trending up.
Okay.
Taking it to the previous high. So we need to look at the previous low and the previous high.
Yes.
Like in terms of taking because you see, we should not zoom it to the like Jerusalem to based on what it just said, Jerusalem to Nazareth. We don't need to zoom.
You don't need to. You don't need to.
Okay,
You don't all the way. All.
Yeah, we don't need to zoom it to that extent. But what I now came to realize, need to look at the previous low and the previous high at the market, right?
Yes.
From this particular scale, because he hasn't gotten to the like our point of interest yet. So now, if you go into other pairs and he did not give you this particular structure, like how can you identify like
That was
this?
what I said. That was what I said.
Problem I have is I have problem on structures.
Okay, that was what I said. Okay. Let me come to short there. That was what I said about. That was literally what I said about structures. If you do not see like this was the first what's it called, the reason why you should how you should always be focusing on structures, trying to make sure you identify structures very, very much correctly. When you get to your analysis, when you get to a pair, for instance, let me see, I get to this pair. When you get to your pair you want to trade, for instance, okay, let's say this pair. If the structure is not clear to me, I'll move. Like this one, the structure is very, very clear to me that the market is going all the way to the upside. So I'll stay and try to make analysis to see if, okay, this thing is, there's a possible trading setup on this particular pair. I'll stay a little bit. If there's no trading setup, I'll move and check for the next one. Okay, the structure is very clear to me on this one. The market is moving all the way to the upside. Move again if I don't have any structure. Move. That's how you keep moving until you see a clear structure. A clear structure. If the structure is not clear to you, just go move away from that chart. Because if you try to want to analyze it and the structure is not clear to you, you just want to blow your money because you'll be feeling skeptical. And those kind of trade where you analyze the trade based off of the fact that you want to trade, you don't really know the direction of the market, you just want to trade. Those are the trades that literally could go to your favor and you'd end up closing the trade early because you do not believe in the analysis. And this is why majority of people complain to me all the time, come to my DM and say, they made this structure, this is a particular analysis, but they wasn't able to hold this particular trade all the way to this particular area because they were very, very skeptical that the market is not going to reverse, the market is not going to go to their direction. Why? Why would you be skeptical that the market would not go all the way to your direction? It's because there's a reason for that particular analysis. Maybe you didn't see something that you were supposed to see, but you took the trade, then you'll be skeptical. Maybe you are going to look for supply zone, inducement, but you didn't actually look for all of those things. You saw a pattern, you trade a pattern. You'll be skeptical because your tradable confluences are demand zone, supply zone, break of structure, but you didn't see all of those things. But you saw that the market is very good. Let me just take the trade regardless. You would end up closing the trade. You would end up closing the trade when you take the trade and you take a loss and the market will move in your favor. You start complaining. So a well-analyzed trade with your trading principle are trades that literally should be held. A well-analyzed trade with principle are trade that are supposed to be held. Whenever you analyze your trade well, you know that, okay, your confluences, you met your confluences and everything. You won't be skeptical to hold that particular trade. But if you analyze your trade based off of fear, emotions, you want to trade and everything, and you will definitely close that trade. Today is Tuesday. Today is Tuesday, and the CPI is not strong because we had NFP on Friday. So the CPI is not strong today. So this is the reason why it didn't impact the markets. So literally, so that's all for today, guys. We'll continue during the next class on Thursday. So I hope you guys have a wonderful trading day. And the analysis to AUDJPY, I had an analysis for like since last week. The analysis I had it since last week, and I literally sent it out to you guys with the sell limit and the sell limit and everything. And Lucky also had an analysis, so it's a win-win for us. Let's see how it goes. It's a win-win for us. When price gets to that particular area, we'll hit that sell button like crazy, and literally we'll hope to make some money from that particular trade. So you guys understand. All right, let's make money this week. No chase. All right, guys. So see you guys on Thursday.